Alright guys and girls, I just want to do this quick video because this comes up about do these indicators repaint. Keep in mind I'm only sharing in these videos one of the indicators. It's just part of the package. Now make it very clear, this is not the Holy Grail. Yes, there will be times like it's going to seem like it's magic, but I want you to understand what repainting is. Okay, there's two types of repainting that I'm aware of. The first one is something like this. Now we're on a 4-hour New Zealand yen chart. Notice that when the market came up here, there's no arrow, all right? But what repainting on some software could do is, let's say the market's come down like 1, 2, 3 red bars, like down, it's down here. All of a sudden, it prints an arrow at the exact high. That's repainting way after the fact. So I can tell you that these arrows are printing real time. In other words, if this arrow is printing here, it's happening right there. Same with these arrows, all right? So it's not like this arrow is printing, but in reality, it shows up here only when the market has come down here, if that makes sense. Okay, the other type of repainting, and just let me change something here real quick. Could be like, and this seems to be the case where it only happens if the market gets shot out of a cannon. So let me just blow this up a little bit so maybe you can see the details. At this point here, we did get a buy arrow and the market's going up, up, up. And it's possible at the time, because the market's saying, okay, I'm getting to the top of the band down here. And let me just draw this for you. Get rid of this stuff. So in other words, when it made that high up here, it's coming to the top of the bands. So if you look, this was actually, the market just started to come down. So the indicator could have hooked down, started to print an arrow. But as the market shot out of a cannon again, it could have unhooked. And then if you refreshed your screen later, the arrow might have disappeared. That's the case. It all depends on the strength or the lack of strength, whether it's going to unhook. But this is why I say this is not a magic indicator. Okay, but with that said, if I just take this off of here really quick, you know, let's say you got into that. Now, I'm not going to be entering on a 4-hour chart, but the market goes down like 18 pips before it reverses. So if it did go in 18 pips, you're not going to take a full hit on that. In other words, you're not going to say, okay, well, I got in, and then all of a sudden you realize it's not working out, and then all of a sudden you have to, you know, wait to get out up here. If I'm up 15, 18 pips, I'm going to start bringing that trade very closely to break even, okay? Now maybe too, and I don't know, it could have happened here when the market started to come down for 2 bars. But that's why I have a checklist, and usually what will happen is, even if I do get these arrows printing prematurely, I've got some safeguards to keep me out of most of them, all right? But with that said, there are going to be times it's just going to get you in a little early. You're going to take a loss, okay? But when you couple it with what I find is absolutely vital, I'm going to teach you strategic market intelligence, which is going to tell you where your odds are better. And this has nothing to do with chart patterns or anything like that. It's more like some places in the charts are more likely to move the market than others, and it has to do where the buyers or sellers are really getting hot and, you know, heavy, okay? And especially with the institutional buyers and sellers, that can make all the difference in the world. Anyway, I just want to share that with you because I know for some of you that's, you know, you just want to know, and that's understandable. So anyway, I'm going to keep this video short and sweet. I know a lot of you like to trade Renko bars, so I've been asked, can you use Renkos with the 3D adaptive software? And the answer is a definite yes. You could use it on range charts, range bars, tick bars, and so forth, although I don't advise it. I don't find any advantage to those type of charts. But if you like to use Renko, you know, that's cool. All right. I don't think there's any one big advantage over it other than sometimes it makes the charts look a little bit clearer, but the disadvantage is you can't set your clock to it. And what I mean by that is, say you're a swing trader and you're only, you know, you're trading off of the 4 hour. Well, you only need to really check the markets to see if there's a setup every 4 hours. Makes life a lot easier. But the Renko bars, because they're not based on time, the bar, a new bar could print very quickly or could take hours and hours to print one bar. So that's the only drawback. But with that said, let's look at the Australian New Zealand. This is a 10 bar mean Renko. I like the mean Renko bars more than the Renko bars. Just a little bit more visually easy on the eye for me. Sell signal up in this area here. Along here, this is kind of like a little trend continuation, more of a momentum continuation type of trade, because that's kind of a trade that's too small for a pullback for trend traders. Short up here. One up here. Now this is when Renko bars can be good, when the market is really ripping. Okay, then it basically really, it's a nice chart to look at. All right. I mean, this is a big run off of this one thing. Of course, full disclaimer, you don't know when these big runs are going to happen. I mean, that's like, you know, 350 pips from there. And I'm not going to say just because you did get in, you're going to get all that. Depends on how you manage the trade. But my job is to get you into really good trades with a high probability and then show you how you can kind of ride these trades to squeeze as much as you can. So you had a couple trades, sort of like a roller coaster. You were sort of just breaking out of a range. It became overbought. Came back into this range. You had a trade to the upside. And now we've run out of signals on that chart, so I'll pull up another pair. Let's take a look at the Euro GBP. This is a 10 brick size as well. And I've chosen that size because it will get rid of some of the noise. So you had one down here. It's possible, but I don't know. I'm just saying maybe you might have had a temporary cross up here, a temporary print on an arrow. It might have not happened. But that's, as I've said many times now, that's why I have other factors that are put into the formula before you take any trade. I mean, this is as good as it gets on this particular trade because every bar is red going down. Now, odds are, how you're trailing at your stop, you probably would have got stopped out. In other words, with the profit somewhere up in this area here. Same thing, if you're riding this one up, you're probably going to get stopped out somewhere as it pulls back here. Some really nice trades here as it's starting to, because this one would be like more of a trend following, right? Conventional trend following. So it caught this big run up of, like, believe it or not, that's like 135 pips. Had a roller coaster ride down, caught a ride up again. Let me just get rid of all this noise here a minute. Oh. Sorry guys, lost my place. So this is one we had to trade here. You would have got filled down here, but at one point it would have gone like 42 pips against your initial position. Now you wouldn't have got stopped out, and eventually this turned out to be a big trade from entry of like 130 pips. But this is the reality of trading. Sometimes it's not all clean and easy. It's like you're sitting here, could have been a couple hours of like sort of slow torture, right? So nothing in all these, you know, waves down. Beautiful one off the bottom. Now keep in mind, if I switch to maybe more of a 8 like brick size or 6, you would have caught more of these. Okay, but then once again there's always a trade-off. Okay, you get more trades, more noise in the chart, so you have to decide what is good for you, right? I mean, this is where Renko bars are great, but they don't always print like this. And it might be they're printing this clean because it's older price action. I'm not really sure. Or it could be because back in March there was still a lot of hyperactivity due to like a lot of the market sell-offs and COVID. I mean, this is just a beauty. That's 200 pips right there. If we could get trades like this just once a day, where it just, you know, this runs up 160 pips without blinking, all white bars, that would be, you'd be rich in no time. But it's not that way. Okay. Anyway, that was the Euro GBP. We'll look at one last currency pair. This is the GBP JPY. This is a market that tends to be much more volatile and have stronger moves in the day, so it can be a good day trading vehicle. The only difference sometimes that I don't like is the spread can be a lot wider. This is a 6 brick bar, so you're going to get more trades. Just want to demonstrate. This is really what you want to see. This is what we all pray for. Once again, you get in and it's all white bars up. I mean, believe it or not, that's over. Well, let's actually not guess. That was a quick run up of 75 pips. One down. You got a couple buy arrows off the bottom. This is the one that's kind of slow tortures. It's grinding up. Just when you think you're up, then it goes back. Just when it gets a little higher, it goes back again. That makes you work for it. Now this is one, like, it depends on what kind of money management you're going to use. It might be that this trade, I mean, it went down like 19 pips. So if you like to kind of, one thing I like to do is if I'm up 19, 20 pips, usually I want to lock in a few. So basically what that would have meant is I could have been stopped out on that. In other words, just with a few pip profit, and then it went the other way. You have to be able to recognize it, that, okay, it was just, you know, backfilling, as they say, and you look to re-enter. Or if you can trade multiple lots, then you have the option of saying, okay, I'm going to have this rule for the first lot, another profit target for the second, and so forth. That's another way to do it. Unfortunately, we can't do that with U.S. brokers as easily. We have to do a weird workaround. So you're going to just scroll back in time, so I'm not cherry picking the trades. Now there's a possibility, but I don't know. I'm just saying, let's say that this was a situation where initially an arrow came up. I would have gone to my other tools, checked to see if there's a trade. Maybe there was, maybe there wasn't. But say there was one here, you know, goes up 7 pips before it comes back like 41. So if there was a trade, I'm not saying there would have been, but I'm just saying the reality is that some you're just not going to make it. My stop is normally going to be like 10 pips plus the spread below this, so you wouldn't have quite got stopped out there if you did take that. You know, here's a trade that's a gift. You know, up 125 pips. So just once again, scrolling backwards, some GBPs. These were massive trades, and these were like, I will teach you why these ones are so much more high probability. I mean, that was a, you know, 80 pip move. This one is even obviously way bigger. You know, 142 pips. Remember, these are not ones trend traders are going to get. There's also a strong reason why this would have been a good trade here. That this comes into like market intelligence. But if you're sitting here and the market is doing that, you would not be thinking, if you're a trend trader, you're not thinking about going long on that. There was also a very strong reason why this one hit resistance and reversed, which would give me more confidence to take that one. So anyway, that's it. A brief overview on how you can use these on Renko bars just as well.